Here we go. So we are live. So welcome, Tom Stone, mortgage agent. So today we're going to talk about refinancing your property. So Tom's going to share some insight with us and give us some deets on how we go about doing that. You know, I have a lot of times people that want to refinance because they want to either redo their kitchen, redo their bathroom, or whatever else they're doing. Sometimes they want to pay off debts. You know how it goes. So tell us all about that, Tom.
Yeah, so first of all, I don't know if your viewers know me. My name is Tom Stone. I'm a mortgage agent with Neighborhood Dominion Lending. So I'll quickly jump into the steps involved. So
Sure.
first of all, you got to ask yourself the why behind you're doing the refinance. So like Jennifer alluded to, are you looking to do home renovations? Do you have some high interest debt you got to pay off? Is it just a simple interest rate that you want to lower? Two big things I'm passionate about are refinancing to purchase a rental property or to invest in things like the stock market or private lending. So that's the first kind of step, is asking what's the why behind the refinance, the simple refinance. So
It's a common answer that you'll often hear.
Yeah, exactly. And then so the next steps involved is to have a chat with your mortgage broker. So if you don't have a mortgage broker, I'd be happy to talk to you. With the steps involved with that, we grab down simple information like basic general information about yourself, employment history, income. We look at your debts and liabilities, and we have to see if you can qualify for the new mortgage that you're refinancing. So
yeah. Now, would people that are refinancing, will they have to go through the same process when June 1st rolls around for the qualifying?
yeah, so anytime a client does a refinance after June 1st, they'll be under the new stress test regulations. So, and the reason behind that is because anytime someone does a refinance, they're going to be doing what's called a uninsured mortgage. That's just nature of the beast.
Can you elaborate on that a little bit?
Yeah, so the previous stress test rate that was out there, a lot of people have heard about it, that the Bank of Canada has come out with, was 4.79. And the new proposed stress test rate that's coming out is going to be 5.25. And so what that means is, let's say the mortgage interest that you're going to be having is 2%. Mortgage lenders will qualify you at the 5.25. So it's like you made payments at 5.25, but you're in theory making payments at the 2%.
And the interest rate won't be at that either. It'll be whatever the current interest rate is that you lock in on your mortgage, right?
Well, that's what I'm saying. Yeah. So it's if let's say you locked in at 2%, that's the actual mortgage payment that you're going to be paying. But lenders just want to make sure that you're going to, like, if interest rates start to climb, that, your next term, whether you go fixed or variable, they just want to make sure that you can basically weather those payments if the interest rate did go up 5.25%.
Yeah. All right. So tell us a little bit more. So what does this process look like? If I want to refinance my home, you said I have to qualify, and then what are next steps? So I qualify, and then what are the next steps? Do you have to have an appraiser come out, or how does the whole process work?
Yeah, so I'll just talk about like my strategy of how I go about things. So once I gather all your information, I basically will do a refinance budget sheet for you, and just basically show you, like you said, the associated fees with actually doing a refinance. And that can include, like you said, anytime you do a refinance, it'll trigger an appraisal. And then likely there's going to be legal fees. Generally, that's about $1,000. And then I'll show you on the budget sheet what your new mortgage monthly payment will be. And then I'll also show you, depending on if you take equity out, how much equity you'll be taking out.
Okay.
And then after that point, once I do that budget sheet, then it's my job to go find you a lender that best suits your needs. So then I'll find the lender that I feel like best suits your needs, and then we'll drop the lender will drop a mortgage contract that the clients have to sign now. And then the existing mortgage that's on your home gets paid out. And then with this new mortgage contract, the new lender comes in and is registered against your home.
Okay, very good.
So so I'll talk about the last few steps. And so once that mortgage contract is signed, then I'll set up a meeting with the lawyer of your choice to sign the appropriate legal documents. That's usually done a couple days before the closing date, just to make sure that everything's good on their end regarding like title, the mortgage registration, things like that. And then once the closing date passes, then depending on if you've taken equity out, then you'll be given those new equity funds into your bank account.
Okay, very good. So when you're looking at refinancing, what are some things to consider for somebody who is considering refinancing for whatever reason, whether it be that they want to take some equity out to buy another property, or they want to do home renos, or they want to pay off some debt and just liquidate it all into one payment. So, what about rates? Oftentimes I'm sure as a mortgage agent, you hear, well, I can get a better rate over here versus here. So do you want to explain all that? Because it's not just the rate that people should be looking at. They should be also considering the terms of that contract with that particular lender. But I'm going to let you elaborate on that a little bit.
Well, I think you alluded to the fact that it's not necessarily all about the absolute lowest rate. I'm sure you've had clients in the past that have, talked about how they've had to break their fixed rate mortgage. Generally, it's with a big bank, and you hear a lot of these horror stories about clients having to pay abnormally high penalties to break. That's usually because the mortgage contract that's laid out, I don't think it is usually explained that well. And so a lot of those like extremely low budget rates are called no frills mortgages. Generally, it's not a full service mortgage where like prepayment privileges aren't that good. The like I said, if you had to break your mortgage mid-term, the penalties are going to be way higher than what like what a monoline lender would be. So again, it's not all about the best rate. And I like to talk about to clients, I understand people want the best rate, and I'm going to try and get someone the best rate, but I like to ask them, what's their strategy behind getting this mortgage? Like, what do you plan on staying in this home for 1 year, 2 years, 3 years, 5 years, 10 years? Do you plan on keeping this, and then buying another primary residence and have this as a rental? Fixed versus variable, that's a hot topic all the time. So it's not just about the rate. There's so many other facets to it.
My assistant.
She wants to learn about mortgages, I'm sure.
Yes, homeschooling.
Yes, exactly. I can be her mortgage teacher.
There you go.
Yeah.
Okay, after. All right. Anything else you wanted to add?
Mom.
No.
Please, one question.
We'll see.
So I'm making some.
Oh, okay.
I made a backpack, Mama.
Yeah, nice.
I had flowers.
All right.
Yeah. I just kind of want to touch on like we can talk about the how to refinance, but again, like I asked about, like, ask yourself why you're doing that. Why I would recommend clients to refinance in 2021.
Okay.
A few reasons, like obviously interest rates are so low, but like a lot of clients I've been dealing with lately, I've kind of coached them through that. Investing refinancing to invest in appreciating assets like real estate, stocks, private lending, something that generates a 7% to 10%, annual return, where, someone's mortgage interest, let's say, is at 2% a year.
Mm-hmm.
Those appreciating assets, whether, like I said, stocks, real estate, whatever, will generally, like 99% of the time, will outpace what your mortgage interest is over, 10, 15, 20, 25 years. And I'll just jog through a quick example. So let's say someone pulls out equity of $100,000.
Mm-hmm.
Their mortgage interest that they pay on that 100,000, it's just for easy numbers, is 2% a year.
Mm-hmm.
And let's say it's amortized and the term is over 10 years. The total interest that you're paying on that mortgage is going to be just over 10,000.
Okay.
So let's say someone buys a rental property or stocks, private lending. So that $100,000, let's say you don't add any more into it, after 10 years, that investment amount is now $200,000. So that's $100,000 of your principal that you put in, and then $100,000 of interest income that you've just generated. So again, this is why I talk about it. It's not just about the rate. It's about furthering clients, building their net worth, building their, strong portfolios for, goals of, funding a child's or grandchild's, education fund, building financial independence where, they don't have to rely on their regular employment income. Now their investments can actually pay for their lifestyle where they don't never have to work again.
Should we touch on reverse mortgages while we're sort of there? I feel like we're kind of at that spot where reverse mortgage might be something that somebody older that, has got some substantial equity in their home and maybe their mortgage is paid off. Maybe do you want to touch on that?
Right. So just before I touch on that, I just want to say, just a disclaimer, I'm not a financial advisor. This isn't financial advice. In this day and age, I have to say this. This is just my opinion. I do recommend, if you want to seek professional advice, if you wanted to get in any sort of investing. So in regards to reverse mortgages, yeah, that's I was actually on a call today with one of the two lenders that we deal with in regarding reverse mortgages, the CHIP product that I'm sure you've heard over advertisements on TV. So what that product is generally it's for those clients that, have had, great appreciation in their home, no or minimal mortgage amount. So they have a big spread of appreciation. They're investment funds, anyone has, any client has to be over 55 to get a reverse mortgage.
Okay.
And basically, sorry, I lost my train of thought there.
Well, you were saying how they get a reverse mortgage. So they have to be over 55, so to qualify. And then what's involved with it? So how does that work? So if you've got equity, you've got a good spread between what your house value is and what you owe on the property, which would be nil to a low mortgage. And you have to be over 55. And then sort of just a quick, how does it work? So they would borrow against, take out a mortgage, and how do they pay it? So
there's a few different avenues they can go. They can just ask for a lump sum payment right off the start, so they don't have to pay any payment or interest. Let's say, just do a quick example, like 100, or someone has a home value of $1 million. They have they have no mortgage payment right now. They put $200,000 on. So now these reverse mortgage companies will register a $200,000 charge against their property, plus the interest that they have to take on it. And then so you can opt to get that $200,000 lump sum right away, or you can do, there's a strategy of paying yourself kind of like a pension where monthly you can incrementally get that that equity every month. But
so it enables somebody to stay in their home and be able to draw out some money on their home to be able to live, essentially.
yeah, exactly. And these, I don't recommend this to everyone. The clients that it does fit are the ones who, yeah, didn't build up a good, investment nest egg, that, are house rich and, don't have as much funds for, from their investment income, that, that want to stay in their home long term. As we know, the long-term care homes and things like that aren't appealing to most nowadays. So people with large amount of equity spread in their home, keep them in their home where they're generating a nice income month over month. Yes, your equity gets like taken away through the reverse mortgage. However, we also have to factor in that home values on a modest scale can appreciate above 3% every year. So the spread of what your reverse mortgage is, goes up a bit, but also your equity goes up. So it's almost on the same, level playing field. And by the time you're done with the reverse mortgage, the equity position might be even slightly higher than what you originally had. So.
Okay. So if people want to reach out to you, Tom, how can they get a hold of you?
Yeah, so I'm as you know, I'm pretty active on Instagram, Facebook. You can message me through there. My email is tom@ndlc.ca, or my cell phone number. I'm pretty available anytime. Evenings, weekends. My cell phone is 289-928-9363. So happy to answer any questions you have. Like I said, I'm very passionate about building people's net worth through real estate, stocks, private lending. I feel like a lot of the big banks don't necessarily coach people on how to strategize for building large net worths, and I like to say that's kind of where I come in, and that's kind of the value add that I can provide for clients. So
That's awesome.
and if your listeners have any questions about that, I'd be happy to run through those numbers with them.
All right, that's great. So virtual high fives. Thanks so much for coming on today.
Yeah.
And reach out to Tom if you got any questions about any of the topics we've talked about today.
Awesome. Thanks so much for having me, Jen.
Thanks.